Hello everyone. Today we are starting with cash flow statement. So it is prescribed by Accounting Standard 3 revised. Okay. So let's move further and first of all we will try to understand what is cash flow statement, what is the history behind it and many more questions. Okay. So meaning of cash flow statement. As its name suggests, cash flow statement means one is cash, another is flow, and last is statement. So one by one, getting to the point, cash. Cash means that is the cash in our hand or cash at bank or marketable securities or any investment that are held for less than 3 months, not more than 3 months. Okay. Or if I'll talk about flow, flow means inflow or outflow. It can be any way, like if I am getting the cash or any amount towards the entity, that means inflow. In case I am paying some money outside the organization, that is outflow. And statement means statement, what the statement represents? Statement represent the report. So in short, overall, what we can say is cash flow statement is a report that represent the inflow and outflow of the cash and cash equivalents that is generated from various activities in an organization. Okay. Sections of cash flow statement means cash flow is segregated in three parts. First is cash flow from operating activities, second is cash flow from investing activity, and third is cash flow from financing activity. I think before going to anything further, we must understand the basic behind what was the reason that we have prepared cash flow statement. Like let me give an example of past. Like some people check the balance sheet and P&L, and what they have seen that their net profit is more, but cash balance is very low. What are the reasons? Because they don't understand when there is so much high profit, but they are short of cash, why it is so, or vice versa. Might be their net profit is very less or cash flow is too high. So there must be some reasons. That's why cash flow statement is required to be prepared. So we'll come to at this situation that we have to prepare it as per our AS. So next, we will more understand about the investing activity, operating activity, and financing. As I already told you that it is segregated in three parts: operating, investing, and financing. So what are operating? Operating activities are those activities which we perform in the normal business operation. Basically, the principal revenue generating activity of our business. Like example, in case I am having a stationery shop, okay, and my main business, if you can understand, is for, in case of stationery business, my work is for purchasing the books, purchasing notebooks, and selling them. So, what is my cash inflow? When I will sell my books, notebooks, pencils to the customer, that would be my inflow. And when I purchase, then it would be my outflow. Okay, that is my principal revenue generating activity. When I talk about cash flow from investing activity, cash flow for investing, what does investing mean? Investing means like I have to invest my excess funds at some place. You can also see that in your family also, when your father do some business or anything like any job, then what they do, like they want to purchase any land, any furniture, any machinery at your house. Similarly, the business will do when they will generate excess cash. They want to invest it at some place like land, plant, machinery, tangible or intangible assets. So that's why this is the reason that we are generating cash, either inflow or in the form of outflow from investing activities. So in case I sell my plant, I sell my land, I sell my long-term investment, then it would be an inflow. And in case I purchase them, then it would be an outflow. So the activities which are related to my tangible or intangible assets, that would be covering under cash flow from investing activity. Then let's come to cash flow from financing activity. Finance. What is finance? Means funds. What are funds? Funds required for the business. Every business requires some funding, and that would be in the form of share capital, long-term loans, debentures. So the cash inflow or outflow from these kind of activities would be coming under financing activities. Like in case I am issuing share capital, I am issuing equity shares, I am issuing preference share or debentures, or I am taking any long-term loan, then that would be my cash inflow from financing activity. In case I am paying back them, like I am redemption of my debentures, or I am repayment, I am making repayment of my long-term loans, that would be my outflow. Or in case I am paying any interest on that or dividend on shares, then that would be my outflow from financing activity. Hope all these things would be clear to all of you. Now come to the next slide, that is why cash flow. As I already told you that some places the people have found that while checking the P&L and balance sheet, what they have found that net profit is high in case, but the cash flow, cash at bank or in the balance sheet is very low, or vice versa. Okay, that means they are having so much high profit, but still they don't have cash. And in case they are having very less profit, but they are having very high cash, there are reasons behind all these things. Like in case you are having high net profit and less cash, there may be the reasons that you have sold your goods on credit, means your debtors are more and you have having less cash. In case you are having less profit but you are having high cash, that means you have charged in your P&L some non-cash items like depreciation and all. This is the reason, that's why they have started preparing cash flow, so that they can understand exactly whether they are having cash or not, what is it. Okay, but why cash flow now? Why we are needing this cash flow? The reason is, first reason is insight into spending activity. Like that is, I have written here, repayment of loan. Repayment of loan is not shown in profit and loss account, so we can't judge anything that is there is any spending like this until and unless we will see in our cash flow statement. Like this is repayment of loan, where will it impact? It only impact our bank balance or cash, and another side it will impact would be the loan, but it will not be shown in our P&L, so we can't judge it from the P&L. We have to check it from the cash flow statement. The next would be better picture of cash planning result, because cash flow statement will tell you about the cash from various activity, so it will give you the more better and clearer picture whether you are having cash or not, or you are short of cash. Next is ability to increase cash flow. In case you have found that you are having this month less cash inflow, then you will try to get it increased in the next month. But you have to analyze it, and this analysis can be done only through cash flow statement. Third is working capital analysis. Similarly, the working capital means current assets and current liabilities, means current assets minus current liability. That means we have to take into consideration current assets as well as current liability. So cash flow will also help you to understand what is your immediate need. Like current assets and current liabilities are, it is very for small period of time, so that's why you can understand what is your short term need. Okay, again short term planning, like short term planning are means that liquidity position of any company, like you are able to pay your debts or not within the time. that will help us to understand from the cash flow position. Okay, moving to the next slide is cash flow from operating activities by indirect method. So in this, we will understand how we can come to the solution of operating activities. How can we check what is the cash inflow or outflow, or we are surplus of, or we are in deficit from cash flow from operating activities. For calculating cash flow from operating activities, we have to do the upward working, as we can see it on P&L. Like I will tell you firstly how we will do in P&L. What we show in our P&L. In P&L, we will show depreciation, we will show provisions, we will show profit or loss from sale of plant and machinery. So all these items are kind of item, either they are non-cash items or they are the item which are not related to operating activities. Okay, you can see here also, like I have given a small example of P&L. In this you can see that depreciation, profit on loss or provisions, these all are shown in P&L. That means these all are impacting my net profit, but these either are of the form in non-cash form, or they are related to some other activity, either it is for investing activity, either it is of financing activity. So what we have to do is the upward working. We have to remove the impact of all these items. Okay, so one by one what we have to do, we have to come at the net profit before taxation and extraordinary item. So we will also explain it later how we can arrive at net profit before taxation. But first of all, I will give you the explanation of this. So what we have to adjust? We have to adjust like depreciation, that is a non-cash item, or we have to adjust the profit or loss on sale of machinery, plant and all. Provisions we have to adjust, or like goodwill amortized. So all these items which are either of non-cash nature or the nature which are not related to operating activities, we have to adjust them. Either in case they are subtracted in P&L, then we have to add back them. In case they are increasing my profit in P&L, then I have to subtract them. Okay, then where we come at operating profit before working capital changes. So for coming at the cash flow from operations, we have to adjust the working capital. So what is working capital? Is current assets and current liability. So what is the formula for it? It is increase in current liabilities and decrease in current assets. We have to add this, and opposite of it will be subtracted, like increase in current asset and decrease in current liability should be subtracted from it. Then we will arrive at the cash flow from the operations. Okay, then what we have to adjust is either the we are having any extraordinary item that we have to adjust, or we have paid any taxes that also we have to adjust, and at last we will reach at net cash flow from operating activities. Okay, now I am discussing the first point, that we have written net profit before taxation. For arriving this, we have to do a working. Okay, so that would be like net profit appropriation account. Like you can see, we are having the profit in balance sheet after so many appropriations. So first of all, we have to adjust that. What we have to do is, first of all, we have to take closing minus opening, closing balance of P&L minus opening balance of P&L, so that we can also say this as balance as per P&L. Okay, and then we have to add the appropriation. So there are so many appropriation. First is transfer to reserve, second is provision for tax, third one is proposed dividend, or there may be one more item in case we are having in our question is interim dividend paid during the year. That would also be adjusted to arrive at net profit before tax and extraordinary item. Okay, so I think hopefully that this numerical or this question part is clear to you, and we are now moving forward towards one of the illustration for better understanding. Now let's start with the question. An illustration is over your screen, and this is what is our illustration. As already explained you the formula, and also I want to confirm you that we are not doing a full-fledged question. We are doing a part of it, as complete cash flow statement is consist of operating, financing and investing, all the threes. But we are now doing only operating part by indirect methods. So this, with this illustration, we are going to solve the cash flow from operating activity. First of all, before doing any question, we have to understand what is given in the question. What are these nomenclature clearer to me or not? Okay, so first of all, one by one, we will go at each and every point and will then solve it. Okay, the question is like, it is the extract of balance sheet first of all. Okay, then now surplus is 2 lakh was in previous year and 3 lakh is in current year. Okay, okay, surplus is balance sheet. According to balance sheet, surplus is also similar to P&L. Balance as per P&L account or P&L accounts, you can say anything, profit basically. Okay, bills receivable means current assets. Okay, accumulated depreciation means we are getting depreciation amount from this. Outstanding rent is our current liability. Prepaid insurance is our current assets. Goodwill is our intangible asset, and inventories are our stock, that is our current assets. Okay, so we are clearer with our nomenclature, that means we can do. So surplus, the use of surplus is at the beginning of the question, like balance as per P&L account, or you can say closing minus opening balance. Okay, so now start with the question and its solution. Okay, the solution is over here. We will go one by one. Okay, first of all, we are having surplus. Either you can write it balance as per P&L account or balance as per surplus. You may write down, or you can write down like closing balance of surplus minus opening balance of surplus. Then you will come at net profit before extraordinary item, that would be 1 lakh. Okay, next is bills receivable. It is part of current assets, so it will be coming under working capital changes. Okay, then also I would like to mention that what I am telling you in the question, like it is our current asset, it is our current liability, you better write down this at the side of your question. Like on the side of the bills receivable, you must write down it is current assets CA, so that you will can easily solve this question, because our main purpose for the examination point of view is to solve the question in the better and fastest way. Okay, so let's come back. So what is yeah, we are at bills receivable. Bills receivable is current assets, so later we will talk about it. And accumulated depreciation means last year it was 3 lakh and now it is 3 lakh 20,000. That 20,000 is increased, it means it is depreciation which is charged during the current year, so we will add back this 20,000. Okay, next is outstanding rent. It is current liability, will take later on, and prepaid insurance also take later on. Goodwill is our intangible asset. Okay, but now you will say, ma'am, we don't take intangible or tangible assets here. We take tangible and intangible asset in investing activity. Obviously, I have already told you that we will consider all these things, tangible or intangible asset, purchase, sale, at investing activity. But what happened in case of goodwill? In case goodwill is increased, that means we have purchased it. But in case our goodwill is decreased, that means we have not sold. Goodwill is not sold, it means this is amortized, and amortized is very similar to depreciation. Depreciation is applied on fixed assets, tangible assets, or amortization is applied on intangible assets. So goodwill is amortized in this case. Like previous year it was, balance was 2 lakh, and this year the balance is 1 lakh 60 thousand. That means 40,000 is amortized. So we will add it back to our profit to arrive at the cash flow position. Okay. So we'll add both of the item, depreciation and amortization. Okay. Then what is our profit is 1,60,000. Now the profit is operating profit before working capital changes. Now we will adjust our current assets and current liabilities. What is our first current asset is bills receivable, and it is last year it is 1,40,000 and now it is 1,80,000. Bills receivable means current assets are increasing, means current asset is increased, and increased current asset should be subtracted, so it will be in the less side of this column. Then next is outstanding rent, means current liability, and it is also increased. But current liability, in case current liability is increased, then we will add it back. Okay, then we will show it at the add side of the column, like add. We have mentioned like add increase in current liabilities, so we will show it here. And in case increase in current assets, then we will show in the below, like in the lower side, that where we have written that less. Okay, now it is prepaid insurance we have done, goodwill already done, inventories. Inventory we'll check, it is increased, so that means current assets also increased. Then we will also subtract this, means we will show it in the side where we have written less increase in current assets. So then our answer would be 1,06,000 cash flow from operating activities. That's all from this point of view, and this means we are getting this much of the cash flow or other. And now we can compare that what happened to our operating activities, that we have added and subtracted so many items from that to arrive at the cash flow position from operating activities. Okay, hope everything is clear to all of you. In case you are having any doubt, you can mention me or email to me. Thank you everyone.